This is lesson 8.1, Buying Plant Assets. This is found on page 224 of your book. If you have not read this section, please go back, do that, take notes, pause the video, and you can come back and watch when you are finished. This is a plant asset record. A plant asset is an asset that a business has that will not be used within 1 year. So cash and other assets that will be consumed within a year are called current assets, but plant assets are things like land, buildings, equipment, and they will earn a profit for more than 1 year. These are also called fixed assets or long-term assets. We need to have a plant asset record, which is an accounting form on which a business records information about each plant asset. So we will have one of these for each asset we have that we think we will use for more than 1 year. So this one is for a copying machine. So we will complete when the asset is purchased, January 2nd of the current year, when it was disposed of. We have not disposed of it yet, so we have nothing here. And then complete each year to record annual depreciation expense, and we will do that later. But we can see here that we think that this will last us 5 years. We think that we'll get $230 out of it when we sell it. The original cost to our company was $16.80 even, and we are going to use the straight line depreciation method. On January 2nd, we paid cash for a new copying machine, $16.80 even, check number 62. This will go in our cash payments journal. Just like normally, we will use the account title office equipment because a copying machine will be in our office, $16.80 in our general debit, and a cash credit. Buying a plant asset on account. We've done this as well. On January 2nd, we bought an office computer on account from Discount Computers of $3,300. We will debit our office equipment and credit our accounts payable of Discount Computers. Calculating and paying property tax. There are two types of tax, real and personal. Land and anything attached to it is called real property. Real property is sometimes referred to as real estate. All property that is not classified as real property is considered personal property. So we are just going to talk about this as our property tax expense. We are going to take our assessed value of $65,000. This will give us our tax rate, which is 5%. Well, we're going to take our assessed value of our land and our buildings. That was given to us, that number is $65,000. At the 5% tax rate will give us our annual property tax of $32.50. So that goes under the account title property tax expense in our general debit and our cash credit.